Hey guys, welcome back to the channel. Today I want to talk about ISAs again. Back in November, there was a lot of speculation that the Chancellor would release a British-only ISA, or an ISA that allowed people to invest in only UK companies without paying tax on capital gains. Now, nothing came of that, but with a new budget coming up on Wednesday, there's been a new article in Bloomberg which would suggest that all ISAs will be retroactively changed so that you can no longer get tax-free gains on foreign stocks. That's absolutely huge, and the internet has been having a meltdown. So today, let's talk about the proposed changes, some of the speculation and rumors, and what it would mean for your finances. And of course, whether these are even good ideas and proposals in the first place. To start with, what was the original British ISA idea that came up at the end of last year, and what is the new one that is being proposed by the Bloomberg article? Well, the original idea was to have an additional ISA wrapper similar to the stocks and shares wrapper, or the cash ISA wrapper, or the lifetime ISA wrapper. This additional wrapper would be an £5,000 allowance on top of the original £20,000 allowance that you can share across the other wrappers, and it would allow you to invest in only UK ETFs or stocks only. Now, that approach could be seen as the nice guy method or the carrot technique.
We can do this the easy way. We're currently doing it the easy way.
For getting people to invest more money into UK stocks. But would it really raise that much money considering that most people don't max out their ISAs? And why would you invest into the £5,000 additional allowance unless you've already maxed out your normal allowance with £20,000 of investments in either cash or stocks and shares ISAs? And that's why the government is also considering the stick option to the former method's carrot. Under this, there wouldn't be any additional ISA allowance, and the ISA allowance would be kept frozen at £20,000, but any investments into foreign stocks would have to pay capital gains. Only British stocks would be exempt from capital gains, even within the ISA wrapper. Now, many people online have suggested that this could even be retroactively changed for previous investments in previous tax years, and would mean that you wouldn't get tax-free capital gains on those investments as well. This would be a drastic change indeed. Major UK businesses and financial services companies are lobbying the Chancellor and have written an open letter in support of this kind of a drastic change. But it would truly be a nuclear option, as people online are absolutely losing their minds with rage.
No! God, please, no! No!
And understandably so in many cases. But I personally don't think it's likely for this to go through. The government often releases news or leaks it to journalists in advance to determine what the general public response is. And in this case, I don't think that they would be willing to take the risk of turning so many potential Conservative voters off right before the election, given how badly this news has been taken. It seems more likely to me that the Chancellor will choose the option of an additional allowance for British ISAs, or a in-between of the two options. But why is such a drastic change being floated in the first place? Well, to start with, the British stock market is in a dismal place. And for a country which prides itself on the strength of its financial services, it is a terrible look. Company after company is leaving the UK stock market to migrate to better places, i.e. the US. The primary reason for this is a lack of capital in the UK stock market. A lack of capital in the market means that companies here trade at a much lower valuation than were they listed in the US, for example. It almost becomes a requirement or a duty to shareholders to move countries, because that's how you would maximize shareholder value. Now, with companies moving to the US, it reduces the quality of the UK stock market, means that less money comes in, and means that more companies leave. It's a vicious cycle that is almost impossible to break. But with 1.9 trillion pounds sitting in cash savings accounts in the UK, the government wants to tap into this to arrest the decline. Now, it's hard to get people who are primarily invested all into cash to start investing into stocks. So the government has turned to an easier option of convincing people that already invest into stocks and shares ISAs to invest in British stocks. But this is an extremely difficult conversation to have, as UK investors only own around 11% of the UK stock market, and most people that have stocks and shares ISAs invest in the US or international funds. Very few of them actually put their money into British stocks, as the quality is so bad and the returns are also bad as well. Now, many people online have pointed out how damaging it would potentially be for UK savers to only be able to invest in British stocks in their ISAs. And most of this is due to the awful returns of the FTSE and UK stocks. But ISAs and tax breaks aren't only there to benefit savers. They're there primarily to benefit the country. Why should the government give a tax break to people to invest in other countries and give other countries, primarily the US, more financial help? Personally, in principle, I do support the notion that the UK ISA and tax breaks should only be for people who are willing to invest into UK companies and stocks, even though it would massively detrimentally affect myself, as I pretty much only invest into foreign stocks. But in principle, it is a good idea. The main issue that I have with it is that it would retroactively punish people who decided to take up the offer of the ISA thinking that any stock, international or domestic, would be allowed this tax break. And I don't think that is fair to retroactively change the rules like that. But I don't see why going forward the allowance should only be for British stocks only, in my opinion. Other people complaining online have said that it's unfair that the government is effectively forcing people to buy UK stocks and preventing them from diversifying their portfolio and giving them a home bias to the UK, which means that they're holding a huge amount of UK specific risk rather than diversifying across different countries. And what I think is absolute BS about that argument is that it's not preventing you from investing into other countries or companies in other countries at all. It's just preventing you from getting tax breaks or tax-free allowances on gains, capital gains from those countries. For me, I would personally probably still take the hit and invest into foreign countries, even though I would have to pay capital gains tax. The UK is extremely generous with handing out capital gains free allowances to its citizens, and most countries don't allow that kind of thing in the first place. If ISAs were restricted to UK only investments, I do think it would be an attractive option for people to invest in. If you invest into foreign stocks, you'll have higher returns, but you'll be faced with a 10 or 20% capital gains tax. Whereas if you'd rather pay no tax, then you would have the option of investing into UK stocks. I believe this would encourage investment into the UK stock market, maybe not a ridiculously huge amount, but it would certainly be a good start at reversing the vicious cycle and arresting the decline of the UK stock market. This would potentially mean that over time, the UK stock market would get better quality companies, more investment, and improve the returns of the FTSE 100 or the FTSE 250 indexes, for example. Even though a British only ISA may be fair in principle, there is a far easier and more reliable option for the government to encourage investment into UK stocks. And that would be to ban cash ISAs. A huge amount of money each year gets put into cash ISAs, and cash is just sitting there. It doesn't benefit the government, the country, or even savers, as that cash is just being eroded by inflation. It should instead be put into stocks and shares, whether domestic or foreign, and it will benefit savers and the country as a whole much more than if it was just sitting in cash. Take the example of Japan. In 2022, Japan copied the British ISA system and introduced the NISA, or Nippon Individual Savings Scheme. This didn't have a cash ISA at all, and it encouraged massive investment into the stock market in both domestic and foreign stocks by Japan's population. Now, even though initially the US was the primary beneficiary of this kind of investment scheme, there has been an explosion in interest in the domestic market in Japan, and that's why you've seen the Japanese market explode by so much, at least in part, over the last year or so. Even though not all of the cash inside of cash ISAs would go directly into stocks and shares ISAs, after all, not everyone wants the risk profile, even with a tax break associated, at least a large amount of it would. And the government would actually be able to tax the interest on cash then that is left outside of the ISA program, providing them with a much needed revenue boost. What other country gives tax breaks for people to leave their money in cash? I can't think of a single other one off the top of my head, and it's absolutely crazy in principle, as you take zero risk by leaving your money in cash, so why are you getting a tax break in the first place? Banning cash ISAs is probably off the table entirely though for the Tory party, as the majority of their votes comes from older generations who keep a lot of their money in cash due to the risk profile, and making them pay more tax would definitely lose them a lot of votes. But I think it will be really interesting regardless to see what Jeremy Hunt does this week with regards to the British ISA and trying to encourage more money to be put into the UK economy and invested into the UK stock market by whatever means necessary. This is definitely a problem that needs addressing as soon as possible, whether it's by the current Conservative Party government or by the next government that will be elected this year. Either way, I'll be covering it. So I hope you enjoyed this video, guys. Let me know if you have any thoughts in the comments. Give me a like and subscribe if you're so inclined, and I will see you guys next time.